If we have to spur growth in the economy, what should be the 3 or 4 key areas that will help spur growth?
I think there is no option but a Keynesian approach where government has to spend more. I mean, it's very obvious you can't, this kind of spending we saw in the first half, I think that cannot, you demand creation in the short run will have to depend on government. So they will have to open their purse strings. That is for the short run. Then I think second is coming, okay, I think you want to create demand. It can also be done via infrastructure. I think many of the countries, I think, are thinking of refreshing their infrastructure, particularly in the West, because as to generate not only employment but also create higher potential for growing in the future. So it serves both the purpose. It helps immediately and also helps over the long run. So I would say that I think this infrastructure scheme, the massive infrastructure scheme that government announced, I think it's a brick and mortar part, or I think the actual implementation has to start very quickly. And I think the budget would be an appropriate juncture to do that. And the third, I think, is forward-looking. I think reforms. Well, reforms is a generic thing. You don't know when it is going to pay off. I mean, to be honest, I mean, we got reforms in 91, but actually growth went up to 8% in the decade of 2000. So it raises your ability to grow in future. I think, so reforms should be a continuing process. It is not an event. I think so that's the way to look about it. And I think you need to do that, because I think that will help in erasing some of the scars that that COVID-19 leaves. I mean, so I would say that I think these are very macro level suggestions. I mean,
subsidies out of two principal component, which actually has held back India's manufacturing. If you see, our exports are not competitive to outside world for a variety of things. But two factors contributed maximum. One is the power cost. In India, agriculture power is free. What is known as transmission and distribution loss in rest of the world, in India, is theft and dacoity loss. And that entire burden comes to industrial power. Indian manufacturers are paying higher power costs than developed world manufacturers because of this unfair sharing of burden. Can the budget take the subsidy burden of agriculture power from the industrial power that will straightway make us competitive? The second burden which our manufacturers carry is logistics cost. All over the world, maximum cargo moves on water because it is the cheapest, then on railway because it is second cheapest, and then on roads because it is expensive. From an environmental point of view, also road is more polluting than railway, and railway is more polluting than the sea. In India, railway freights bear the burden of passenger subsidy. Our passenger fares are lowest in the world, hasn't changed for decades. And unfortunately, logistics cost for Indian manufacturers from railway transport, railway freight, is making them uncompetitive. Please free up manufacturers of India by removing the agriculture power burden from industrial power and by removing passenger fare subsidy from railway freight. The second thing which the budget should do is about PLI scheme. It's a fantastic scheme. However, we must learn from the mistakes made in textile upgradation scheme. Honest entrepreneurs took far less borrowing from textile upgradation fund, and many crooks borrowed far more money, and hence the benefits of TUF didn't accrue to textile sector as much as the money was spent. If you see some of the large NPAs in textile sector, it originates from the easy financing of TUF. So ensure that ELI is administered in a manner where honest entrepreneur benefits and they actually create growth by absorbing money from government. The final thing about budget, and I'm repeating, is to free up entrepreneurship. We have come a long way in improving ease of doing business, but private sector investment is still on the back foot. There are multiple things required for private sector investment, as has been described by all my co-panelists. But most important thing is rule of law. There are more than 4 million cases of check bouncing lying in the court. If we can't have rule of law, how will entrepreneur make an investment?
One is the FTA, second is the domestic trade policy, and third is manufacturing for competitiveness. On FTA, I think one of the reasons for widening trade deficit is underutilization of our existing FTA benefits by the Indian traders, which is the problem lies with the entrepreneurs. So there is clearly a need for the government to review the existing FTAs. For example, the ASEAN-India Trade in Goods Agreement and the India-Singapore SECA, the Comprehensive Economic Agreement. Leaving alone the debate on the RCEP, I think India, as a part of policy, should actively look at boosting bilateral and trilateral trade. And I would say that the two important trade agreements which will be looked forward to as a substitute for RCEP is one, the Japan-Australia trilateral supply chain resilience initiative. And the second is the early harvest scheme, which is being put in place to start with Thailand. And I'm sure that we would look at other countries as well. Third is the FTAs, which are being talked about with Mauritius, United States, and Russia. And I think we should accelerate the one with United States and the EU trade agreement as well. I mean, remember, EU is the largest trading partner with above 11% of total trade, which is on par with the United States. And our FTA with EU has been hanging for a while now, almost a decade. Second, before I come to the domestic trade policy, is the SEZ and the continuity and so on and so forth. So it's one thing to say that the 2004 SEZ law brought us all these changes by way of foreign exchange earnings, employment creation, largely in the services sector. But I think what is now before the government are two things. One is the WTO ruling, which India has appealed against, because many of these export-oriented schemes were questioned, which is the export-oriented scheme in the last 15 years or so. And the other important aspect is the Baba Kalyani report of 2018, which is relook at the SEZ policy. So there are some excellent recommendations, and I'm glad to see that it is back on the table to look at the broad-based employment and economic growth, also called the 3 E's of the Baba Kalyani report: formulation of separate rules and procedures for manufacturing and services, enabling the ease of doing business as an integral part of the 3 E's with the state's economic body, competitiveness of the ecosystem, and promoting greater integrated industrial and urban development rather than looking at a SEZ unit as such. My last point on the foreign trade policy, which, as we all know, got delayed from 2020 because of pandemic, and as we all know that this policy serve a 5-year period. So you're looking at 2026. I think again there are several recommendations before the DGFT. I think merchandise exports in the aftermath of COVID-19 is an area that is of focus. If you look at the trends insofar as exports to China, South Korea, Vietnam, and Indonesia is concerned, it is showing a very positive trend.
We have to make our strategies for improvement or increase in public investment, private investment, and household investment. And in one line, I will say for household investment, we have to give confidence to the household investors, which is lacking right now. And confidence can be given by giving direct monetary support. There is no other way during this COVID time. If for private investment, I agree with my co-panelists when they say that there are issues with the manufacturing sector, service sector. Yes, Rajeev, service sector is something where we are losing consistently, whether it is the export of the services, or whether the supremacy in the IT or the ITES, we are losing consistently. So we have to tackle their issues, we have to address their issues, and we have to make the environment conducive so that the private investment should increase in the economy. And public investment, government should come out of the fear. They had, I don't know what kind of fear they are having of deficits and debt rating or sovereign rating. Without any investment, also our sovereign rating is coming down. So make some investment in the economy. As per IMF, the Brazil and US had invested 10 to 11% of their GDP. We had spent only 2% of our GDP as per IMF. So we have to confidence in the economy. So first is improvement in public, private and household investment. Second, Rajeev, the focus should be on job creation. If we are not going to have a focus or strategy for the job creation, we have to specify, we have to select the sectors where the job creation opportunities are maximum. We have to first of all address their issues, thereafter the other issues. Otherwise, if there is no focus on job creation, like I pointed out in my initial remark that in the month of November, 35 lakh organized sector people had lost the job in 1 month. And that too in November, not in April or May when we have 100% lockdown. Third point, that we have to balance between generating demand and supply. Rajeev, I am 100% sure that government has to focus both on demand and supply. Saying that we are making a supply side intervention is not correct, because the data is reflecting that we have a contraction in 8 core sectors. So we can't say that there is a supply side, everything is okay, only demand side is issue. There is a problem in the supply side also, because the industry is working less than the 70% of capacity. And last but not least, Rajeev ji, the agriculture sector, which is the backbone of our rural economy. We have to ensure that the farmers should get the right price for their products or output. Whatever, I'm not taking our debate to the three laws or the agriculture laws which were passed, but if a farmer is not getting right price of its product, and when we say right price, if a farmer is denied the minimum support price of his output, then we can't grow, because that is the backbone of the rural economy. 62% of our population is still dependent on that. And during the pandemic, we had seen when every sector is down, they are growing at 3.4%. So we have to compensate, we have to give a good gesture or remuneration for their hard work and effort. Whatever laws we are making, they feel that they are going to be denied with their right price for the right product. So these are 4 strategies. The government should come out clearly in the upcoming budget on these 4 strategies.
The focus area for the budget, which I think important, is continue with the infrastructure spending from the government, that at any cost, that if that is hampered, then the whole demand, everything, ease of living, ease of doing business, logistic cost, all will be hampered. So infrastructure spending is one area. Second is the opening of the defense industry for small MSME manufacturing. They need to be more supportive on that, whether through cluster development or assured buying, etc. That is the second area. Third, with Nilesh and others have pointed out, PLI is a very well accepted schemes by the industry. Lot of support is coming, and they are finding it is attracting investment. So more refinement into that is required. Some have been suggested by Nilesh. Definitely we will look into. The 2 areas where I thought were important area where budget will have to focus for supportive sort of thing is middle class and unorganized sector. They are at a big squeezed areas which need more support at present juncture. On the trade agreement, I have been working on them, and I think instead of going for multilateral, that is not helping at all into India. That because FN, most favored nation issues, etc. But I think bilateral trade is the way forward. Bilateral trade agreement we should go into. Some have been suggested by Mr. Butani and Mr. Joshi also have suggested that those will be a focus area. PUG is definitely working on that. On the agriculture sector, I would like to mention is that we have got into a complex situation. At one point of time, we want to give price support to the farmers. It's a historical and issue also. And second is we are also giving cost reduction support with subsidy, which Nilesh has also mentioned, power subsidy and other subsidy, freight subsidy, all those things also. So we have to move in one direction. Clear, I think we have to clarify whether we should give this price cost reduction support or price support. In
Sure.
both things, it becomes quite complex, and we have to move slowly, not immediately, but move to one direction, that we go more for cost reduction support instead of price support, because ultimately this creates certain problem, but not at this present. Overall reworking is required, and